with Merton Council on the long-awaited discretionary grant fund, and I'm really pleased that we have David Kepler and his colleague Sarah Merter from the rates department here. So they are the people that are processing the applications and answering questions, along with Sarah Williams from the Future Merton team. Now, this session is specifically around the discretionary grant fund, which is quite clear in the guidance that the council have taken from central government, and we will go through that in a minute. Just some points of housekeeping. Right, so we have muted you all. So when I come to ask you, if you'd like to ask a question, you can unmute yourself. And in order to have some order to that, I'm going to ask you to, when we get to the questions, to just put that in the chat that you'd like to raise a question, and to say what type of company you are, whether you're a charity or whether you're a bed and breakfast, a market trader, or the businesses in shared premises, because that then really helps get the answer clear without that having to be asked of you, because we have all types of businesses in this session today. So that's the one thing. If you want to see other participants, you can see that in the bottom left of your Zoom window. There is a participant list, and the chat screen is always there. I think if you're on an iPad or a phone, they might be at the top right, but those are really the three main functions that we use. And what we're going to really do is just ask David Kepler to give a brief summary of the guidance, which is available on the Merton Council website, and then we'll go straight into questions. And I will kickstart that with 4 written questions that we've had submitted, and then open up to the rest of you. So I think without further ado, I'll welcome David, pass over to David, and we will all listen carefully with intent. David, thank you.
Thank you, Diana. I hope everyone can hear, and good morning. So I just want to spend a little bit of time going through the policy or the guidance from the government, the council's policy, the 2 different phases that we're looking at, give an update on what we found so far, and perhaps touch on the type of evidence and information that we're looking for from businesses and organisations. So the discretionary grant scheme, we have got just over £1.3 million in funding from the government. There's been some discussions, and I've had several questions regarding if we hadn't paid out all of our retail relief grants, if we've got a surplus of that, can we also use that surplus of money towards our discretionary grants? Unfortunately, the answer is no to that. So the council were given just over £29 million in grants, in grant funding that the government thought we'd pay out under the initial stages of the initial grants. I think at the moment we're just over £27 million. So there's a couple of £1 million that we haven't paid out, but unfortunately we cannot use that funding, that additional funding that's still there, to allocate to the discretionary grants. We will have to give that money back to the government. So we've got £1.3 million in funding. So the government issued their guidance back in May, and it's mainly aimed at, or the grants are mainly aimed at small and micro businesses, and there's some definitions of small and micro businesses. Businesses or organisations with relatively high fixed property costs that can show significant loss, with a rateable value mortgage payments or rent of less than £51,000 per year. We're trading on the 11th of March, and there are some other exclusions to other types of help that the government have offered, that if businesses have received that, then they're not eligible for these grants. The government also put in some priority areas that they wanted local authorities to target. So I've been almost every week in discussions across London with revenues managers, and it's all we've been talking about really for the last 3 weeks. Some councils have followed the government's guidance and gone with the priority areas. Others have just maybe identified 1 or 2 of those priority areas and are targeting those. And some, or a small number, have completely gone against the guidance and the priority areas that the government have put into their guidance and have come up with their own priorities. So we have decided to go with the 4 priority areas, those being shared premises, or businesses and organisations, nurseries and shared premises, market traders, bed and breakfasts, and charities in receipt of charitable relief who would have previously been eligible under the Small Business Rate Relief Scheme. So they're the 4 priority areas, and we decided to go with phase 1 of our scheme just for those 4 areas. Part of the reasoning was we don't know how many businesses we have in shared premises, so it's very difficult to calculate what the uptake might be. We have an idea of the number of market traders. We have an idea that we've got a small number of bed and breakfasts, and we've got an idea of the number of charities that might be applying. But it's the area that we had the most concern around, and when I say about most concern, it's because we didn't know the volume, was around businesses or organisations in shared premises. So we decided to go with the 4 areas as phase 1. And applications in phase 1 will just be for businesses and organisations that fall into those priority areas. We opened the scheme last Wednesday at lunchtime, so we've now been open to applications for just over 5 days. It was difficult to anticipate the sort of demand that we would get. I was expecting it to, so I'll tell you where we are. We've got, at the moment, we've had 91 applications. Now, I was expecting it to be more than that after almost a week in. I'd heard that Croydon, within the first 2 days, had over 300 applications. Possible reasons for that was theirs was first come, first served, if you like. And possibly they probably have got more businesses than we've got. But certainly there is demand, there's high demand, and listening to other London boroughs, there's been high demand for these applications. But as I say, we've had 91 at the moment. Just to give you a little bit of information on what we're seeing, what we're finding is that a number of the applications don't meet the criteria. So we're getting businesses and organisations that are applying that are actual ratepayers. And that's not one of the criteria in the first phase, unless you're a charity and you're paying rates. So we're getting businesses and organisations that aren't charities that are applying. So immediately, we're going back to them, we're telling them they're not entitled, they don't meet the criteria, and they should look out for phase 2 if it comes along later on in the month, or probably early July, and they will be eligible to apply under phase 2. As I say, we've received 91 applications. We haven't worked through them all. I think already we've probably looked through half of them, and just under half have been rejected for different reasons. Another reason that we're seeing is businesses that have started trading or have moved into their premises in February and in March this year. So one of the criteria is you need to be able to demonstrate a significant loss of income. They're new businesses, started in February, started in March. They're unable to demonstrate a loss of income. So they will not be meeting the criteria. So unfortunately, we're having to refuse those applications as well. So I guess perhaps if there is some good news, and I accept that this position may change, but looking at where we are at the minute, under 100 applications, and I'm sure we'll get a lot more, and many businesses may leave it to the last minute type of thing to apply. But where we are at the moment, I think it looks like we will go to a phase 2. And I have to be honest with you, at one stage, before we went live and listening to other London boroughs, I think there was a real concern that there may not be a stage 2 because of the number of applications that we got. So where we are at the minute, I think it's likely there will be a phase 2. Obviously, if we're inundated between now and the end of next week, or sorry, the end of the application period, which is next Wednesday, then things may change. But if I had to give a view now, I think there'll be a phase 2, which I'm sure most of you would welcome. So when it comes to phase 2, really the council's looked at one area. So we're looking to prioritise businesses and organisations that demonstrate they can support closing the equality gap between the East and the West. So I hope that you would have some ideas that you might be able to include in applications. I thought about this because I'm thinking, what are people likely to ask me this morning? And I'm thinking that people might be asking me, how can I demonstrate this? So some of the things that I thought about is where you can evidence that you're assisting the most vulnerable within the borough, where businesses and organisations are accessible to everybody in the borough, including those in the East. Perhaps where businesses and organisations are employing people from within the East of the borough, and perhaps sort of around the location of the business. Now, the policy as it is, it looks at those businesses that support that that addressing the gap, if you like, will be given priority. That doesn't mean that anybody who thinks that perhaps they don't meet that criteria or will struggle to demonstrate that can't apply. Absolutely, everybody should apply if they feel that they meet the other criteria around the rateable value and being a small or micro business. I think we would encourage applications from everybody under phase 2. So the level of grants that we're paying out, the policy details the level of grant, and certainly for shared businesses, it details how we would assess a grant, whether it be 10,000, 7.5, 5, or 2.5, and it's around demonstrating that there's been a loss of income. And I have to say, looking at the application so far, I think that's relatively easy for organisations and businesses to do. And the other side of that criteria, if you like, is what are your fixed property costs? So your rental costs, your lease costs, anything like that. So they're the two factors that we look at. And then depending on how much your fixed property costs are, providing you can then show that you can demonstrate a substantial loss of income, you would fit into one of those criteria that I haven't got displayed here, so I can't tell you what they are, but that are listed on the policy. And as I say, it's 10, 7.5, 5, 2.5. The policy does give us a bit of flexibility where we can award grants of £25,000 in exceptional circumstances. I think the approach that we wanted to take was, I said earlier, £1.3 million. If, and it's an if we decided to pay everybody £10,000 each, that's only helping 138 businesses. So I think the council wanted to take an approach where perhaps we'll make some of the grants smaller, and therefore hopefully we can assist more businesses. As I said earlier, phase 1 ends on the 24th of June at 5 o'clock. So if you are going to make, and I'll come on to that in a minute. So what we've got is a panel to make decisions on the grant applications. And the panel is made up of 3 officers. It's also made up of Diana from the Chamber of Commerce, and I can never remember his surname, Diana, sorry, Simon Shimmons, who's the Chief Executive at MVSC. The 3 council officers are Sarah from E&R, myself, and Caroline Holland, who's the Director of Corporate Services and will be overseeing the panel. So the panel will be making decisions on applications. I've scheduled the first panel meeting for the end of next week with the aim of getting some first payments out by the end of June. So if you are thinking of making an application, obviously you've got until the end of next Wednesday afternoon, but I would say if you can and where you can, if you could make that application sooner, because we are looking at applications and we're sort of putting them into different categories, whether we don't think they're entitled, they don't meet the criteria, or whether we think they're entitled and for how much. So we're doing that already. We don't want to leave it to the end of next Wednesday and then have to go through hundreds. So we're doing that process already. So if you are considering applying, if you can, try to get your application in as soon as you can. It just gives us a bit more time so we can get more payments out quicker to the businesses. So as I say, the closing date is 24th of June. We have panel meetings scheduled for the end of next week and then a couple for the next 2 weeks. What I'm hoping that we'll be in a position to do is come next Wednesday is have an overview. So whilst we might not have made decisions on every single application, we'll have an overview of where we are, of how much money we think we will likely award, and be in a position where we could look to open phase 2. So what I don't want to do is, or what we don't want to do is wait until we've awarded every single grant under phase 1, which is likely to be, I don't know, at the end of the first week in July, and then open phase 2. It's just delaying that process. So the plan is next Wednesday afternoon, the application's closed. Maybe Thursday we can look, what is the position? What's the overall position? Can we open phase 2 sooner so that we can start the process for phase 2, which will result in payments being made sooner under phase 2. The final thing, Diane, I wanted to touch on, if that's okay, is evidence. So the web form tells applicants what we're looking for. We're probably finding that we're having to go back to at least 50%, if not more, just for further clarification and information. So I thought I'd just do a quick list of the things that make it, the things that we need and that make it easier for us so that we don't have to keep coming back. So what we're looking for is proof of tenancy, a lease, a rental agreement, something like that, which proves that there is that there's a occupancy in place. Sorry, it's all moving around. So there's occupancy in place and you've got that rental agreement. What we then look for is evidence on a bank statement somewhere that the amount of money that's shown on the lease has been paid. Now, I appreciate that some businesses may not have paid rent since March. So we're looking for evidence that can be back to January, February, even into last year, showing where you've paid your rent to your landlord. And that rent ties up with the amount of money on the lease. So we're looking for the copy of the lease and then proof that that payment has been made. And it could be an invoice that you've had back that's confirmed that it's been paid. The other thing that we're really looking for is this evidence that your income has reduced. And I've seen a range of different evidence supplied. I think the easiest thing for me that I look at is probably, and if I get this terminology wrong, then apologies, probably something like a cash flow forecast, which shows down one column what your income is for each month, and then in other columns it shows your expenses. And I've seen a couple of those just on spreadsheets, or whether it's an accounting tool that demonstrate to me for the last 6-10 months, whatever it might be, your monthly position, income and expenditure. And that makes it easy to see what your income was, I don't know, December, November, September, January, February, March, and then you see this reduction probably from March into April and May. So something that we can see demonstrates that reduction in income. What we have been getting and what isn't easy is some businesses and organisations have just sent in bank statements for April, May, and those bank statements show incomings and outgoings, and it's difficult to establish exactly what your income is for the business, and then it's equally difficult to compare that to a previous period. Diana, I think that's everything that I wanted to cover. So great. I'm happy to take any questions.
Yes, thank you, David. And one of the things I would say is that because it's an online application, you have to go through the application form, I think, David, to get to the other end. You can't download it and sort of assess it. So I think the advice is to have that information available to hand, because you've got to upload it before you start on the application. Otherwise, you're going to waste your time getting halfway through the application and then not knowing that you haven't got the information to hand. So, you know, scan in your lease or your rental agreements, your bank statement that shows those payments going out, and the profit and loss or cash flow or whatever that compares to demonstrate that you can show loss of income. Now, one of the questions I have on that, David, is it one size fits all? Have you got to show loss of income and qualify under one of the categories and show that you are closing the equality gap between the East and West? How is it the sort of level playing field in that?
So the policy states priority will be given to those applications, or to those businesses and organisations, and I think I acknowledge that many people might struggle. So we're looking for, if you can supply any evidence that that you meet that criteria, then great. But if you can't, then that doesn't mean that you can't apply, and applications will be assessed. Yeah.
Lovely, thank you. So we've got quite a few questions just in the chat box. So the first one there, David, because Sarah's responded to this, but people are asking about the £51,000 threshold. So just to be absolutely clear, it's either your rateable value or the amount that you pay in rates that has to be under 51,000.
So it's the rateable value. Or the amount of rent that you might be paying, and the government say the amount of mortgage that you pay within that year needs to be below. Okay. So the rateable value we need to be careful about, because the rateable value, if the rateable value is 51,000, then your likely rates payments are roughly half of that. So if you're paying £48,000 in rates, the likelihood is your rateable value is above 51,000, and you won't meet that criteria.
Now, where would people see that? On their rates bill, wouldn't they?
Absolutely. On the business rates bills, it will show it. If you can't find that, you can go onto the valuation officer's website, put in your postcode, and your business address will pop up and you can see it there. If you're really struggling, then you can contact our office and we can tell you, but they're really busy. So if you can find it elsewhere, great, or just send an email or something. But there's two ways you can do it, as I say, rates bill or the valuation website.
Lovely, thank you. And then we have something here about phase 2 and the criteria for phase 2 and whether it will be the same as phase 1. So I don't know. Obviously, we're leaping ahead a bit.
Yeah, no, that's fine. So no, it won't be shared businesses in phase 2. It can be business rates payers in phase 2. Absolutely. So the shared businesses or shared shared premises is for phase 1 only. Phase 2 would be open to business rates payers. So obviously a lot of people have been applying or have a querying around the initial grants that haven't been entitled under an initial grant scheme because they failed to meet that extended retail relief. They can apply under phase 2 if they're a rate payer and they meet that other criteria, Diana.
Yeah. Okay. Lovely. Good. Okay. And then we've got one which I think is a really good question, which is about what constitutes fixed property costs. Okay. And whether utilities are included in that, really.
Yeah. So we had that discussion as well, Diana, didn't we?
We did.
So really, we've looked at, and what we've seen is mainly rent. I'm getting quite a few applications where people are saying I pay insurance, and then when you question them a bit further, the insurance that are including is actually insurance for the business, insurance for their staff, insurance for one I think I had from a nursery, so insurance for the children. So that cost wouldn't relate to the premises, if you like. So if people do have to pay and do pay insurance on the premises, then I think that could be included. Diana, you were we discussed around internet fees and things like that, and we didn't think that was fixed business costs. One that I've seen that I thought was that sort of in the spirit of things seemed absolutely reasonable was somebody had to spend some money on their business to make them COVID compliant under the new guidance. And whilst you might say, well, that's not fixed and that's not an ongoing charge, I felt that seemed reasonable, and we would be putting that through to the panel to sort of take that cost and average it over the year and include in the calculation. To me, that seemed like a reasonable cost that somebody has had to pay out in this crisis, and we could consider including. So whilst we never thought about that in the first, when we drafted the policy, it seemed like a reasonable thing to do.
Right, good. Okay, so I think on that with utility costs, I think one of the things that I've had discussions with people on is that obviously if you are in serviced offices and you have a recharge of utility costs to you, that usually is a fixed monthly amount, which is different to say if you're paying your own and you've gone away, so you're not paying those utility costs, because utility costs usually aren't fixed costs. But I think if it's a recharge cost, does that make sense?
Yeah, so, absolutely. I have to say, Diana, I haven't seen, and I've not looked at them all, but from the ones that I've been looking at, I haven't seen very many at all, if any. It's mainly been the rent that have been coming forward. But as you say, but if there is that fixed cost, then absolutely.
Okay, so that's great. So then we have one here. I will get on to the questions that have also been sent in. But for relatively new businesses, obviously, you know, the growth trajectory of a new business is often that your income takes a while to come in. So if that hasn't stabilised, how is that taking into account? So the lady is asking about a cash flow projection in that regard.
So the policy talks about, and I can't remember the exact wording, I think it talks about evidence of significant loss in income. As I say, I saw an application that the business started on the 1st of February. And in February they had, in fact, although they moved into the property on the 1st of February, they only showed me any sort of income from the 1st of March. And in my view, and again, this would go to the panel, they were unable to show that reduction in income, and the scheme is designed, or the aim of the scheme is to help Merton businesses that can demonstrate a reduction in income and those high property costs. So whilst it's not my decision, it will go to the panel. I think those businesses that can demonstrate that would be of a higher priority. But like I say, that's not my decision, and that would be something for the panel to judge, decide on, discuss. And I appreciate that new businesses have suffered, but that wasn't part of the initial criteria.
So you've got to be trading by that date.
Yeah, 11th of March. Yeah, absolutely. I mean, I saw one where they only moved into the borough on the 21st of March. So again.
No. So I think if you were a new business, you may have a business plan that had a financial projection in there for, say, the next 12 months. And then because of this, maybe you haven't been able to operate that service at all because of lockdown. Then that would be, I would have thought, a demonstration that that was your income targets that you haven't then achieved by showing your current income as whatever. So it is how I think each business has to go away and review your own circumstances and send in what you think supports that. And I'm sure there'll be questions anyway, won't there, David?
Of course.
So another one here is whether businesses are rent payers actually to the council. Obviously, the council owns quite a few premises across the borough. So the answer to that.
I absolutely apply. I've seen a couple where where Merton's the leaseholder or the landlord, or whatever you want to call it, and absolutely fine to apply.
Okay. Now this one then is about if you're running your business from home, would you qualify under the loss of income? Obviously, you're not paying rent to anyone.
So that's an interesting one, and we've seen a few. businesses that, or organisation, probably businesses, small businesses that have applied for that. So I'm going to give a couple of examples. One example where the business proprietor was actually the council taxpayer. So he was liable for the council tax. His wife rented him a room for the business, and he was responsible for the council tax in that property. I've then seen another one where a business has been renting a room from a third party. So obviously going to somebody else's property and applying. And we've received both types of applications. Again, it would be for a panel to decide, but my view would be if you're charging yourself, then that's probably not as favourable an application as somebody where you're actually physically paying out to a third party for your property costs. You know, so his wife was charging him to rent a room, and he was jointly liable for the council tax.
Right. Okay.
But you can absolutely, Diana. If you're running your business from a property, you can apply. Absolutely.
Great. Okay. So I'm going to now go to Melinda Saz, who has a sort of similar type of thing about two people being part of the same business. So Melinda, do you want to come in and ask that question? You have to unmute yourself. Okay. Can you unmute yourself, Melinda? Bottom left. That's it. Perfect.
Successful. So I actually have a couple of questions with this whole thing. Firstly, I would like to ask this: if a sole trader is can apply, or it has to be a business, has to be minimum 2 people, or 1 person as a sole trader is eligible or not?
Sole trader, absolutely. Yep.
Okay. I have some other one as well. So what happens if by any chance the business closed down? So, you know, if we try to keep it up, but during the application, after they get the money, do we need to pay it back, or how is it working?
Okay.
Thank you.
So I'm going to relate this to the initial grants that the initial grant scheme that the government implemented. The criteria was fixed. We paid out grants to businesses of 10 or 25,000, and I saw several that within a month or so, and bearing in mind these are business rates payers, within a month or so had notified us and told us that they closed their businesses and they were no longer liable for the business rates. And nowhere in the guidance was there any instruction, guidance, advice for us to recover that money. The only times we would look to recover money is if we paid somebody and then we believed that on reflection perhaps we'd made an error, and that's a difficult conversation to have with businesses, but we have had that. You know, certainly early on we were keen to pay businesses as quickly as we could because of the pressure on businesses and the pressure placed on local authorities to pay quickly. You know, we made some decisions that on reflection, once we'd sort of spent a bit more time dealing with it, were incorrect. And the other occasion is where we'll try to recover the money is if we believe after the fact that it was a fraudulent claim.
Okay.
Can I just go ahead? I have another one. It's a little bit more complicated. We are a partnership, 2 of us, and I did get this, how does it go, the self-employed income support scheme, but my business partner didn't. And I did read previously that you said that whoever is having that business is not eligible. Now I see your website and it says the business is eligible.
So initially the government guidance was, when they first published on the 13th of May, it was if you'd received that, you weren't eligible to claim, and then they changed the guidance on that, so now you can claim. And I think our website probably reflects the initial guidance and then what the policy is now.
Okay, just a very quick one more, that we how we do it, that the business the bank account is under my name, and so if I can claim, that probably not really a problem, but if he, for example, if he claims for this support, but the business account, the bank account is under my name, is it any problem, or can it be?
It shouldn't be. I mean, we are so on the initial scheme, we were encouraged by the government to make payments and undertake post-payment checks, validation using a variety of different tools that the government gave us. This time, the focus is very much on prepayment checks. So we will be checking, we'll be using the council's fraud team to do validation on businesses and organisations that we're likely to be paying. And there's a variety of different tools that they will use, including looking at bank account numbers and things like that. So it shouldn't be a problem, but we will undertake validation on all applications before we make payments.
So it's actually much better than if I apply, because everything is under my name.
Probably,
apply.
yeah.
Okay,
Although,
lovely.
you know, if the business is in all three names, you know, and there's those checks, then it shouldn't be a problem. But it's probably
so it's not a joint account; it's just my account.
Yeah,
that's why.
yeah.
Okay, thank you very much.
Okay, thank you. Right, now we have one here about a company that operates in 2 premises. So I'm going to ask James at Little Forest Folk to unmute yourself, James, if you're there.
Hello, yes.
Yeah, well done.
Thanks for organising this. It's just a quick one. We've got a nursery business, childcare business, that we do operate from a shared premises. And so we haven't received any rate relief or the small business grant. However, within the same company, we also rent a small office.
Right.
And, you know, we pay £10,000 a year for that, and we did receive the small business grant for that. So within the same company, we've got 2 settings. One has the grant, the other hasn't. And I would, you know, the nursery setting is the bigger business. It's where
sure. So for one of them, you're the ratepayer, and the other one you're not.
Exactly. Yeah.
Yeah. Okay. That's fine. I mean, you can apply. Well, you wouldn't have to apply for the first one because you've already had it, but you can apply where your business is the share in a shared premise. Absolutely. Yeah. So just because you've received the initial one, in effect, you're applying under a different property address.
Okay. So just because we've received it for the whole company, we received the business, we're not ineligible.
Yeah, that's a good question.
It
Actually,
is,
I'm gonna come.
Business,
yeah, absolutely. Yeah,
Mm.
that's really good, James. I think I'm going to come back to you on that if that's okay. Diana, will you take some email, or can somebody take some email addresses?
Definitely, we've got the question in writing.
Yeah,
so
James, the way you've said that has made me just doubt what I'm saying. I mean, my feeling is you can, and as long as you're clear that you've told us you've already got that. But let's just double check that if that's okay.
Thanks. Yep, appreciate
it.
Right, no problem.
Great. Okay. Right. Now we have another question from Ian Fielder. So Ian, are you there to ask your question? Is he there or not? Otherwise, he's not there. Okay. Right. I think actually it's about the rateable value or annual rent or mortgage under 51,000. Big word or. So it's whether you have more. I suppose you could have a mortgage and your rent that takes you over the 51,000. I think that may be what is implied there. So that's another thing that is, you know, a grey area, isn't it? Yeah,
possibly. So you could be, for example, you could be the ratepayer, couldn't you? And you could own that property. So you're paying, your rateable value is under 51,000. Possibly your mortgage payments are equally as high, and collectively, does that take you over the 51,000? That's another good question.
Well, we'll take it away, and I think
absolutely.
what this demonstrates is ask the questions beforehand, because really what Ian is saying there is it worth his time in completing the application form. He'd just rather know beforehand.
Yeah,
so,
absolutely. Yeah,
you know, let's take that one as that. Right. Okay. Now we have one from Cherry Pie Music, and Tom there. Is Tom there? Otherwise, I've got to find that one.
Hello. Yep, I'm here.
Yeah, come on in, Tom. Then.
I think my question's been answered. It was really about the phase 2 of the application, and really what I have to do. We're a business like everyone else who's obviously suffered, been closed down. and we're reliant on customers coming in, buying music lessons. We've got a rateable value of under that threshold, high fixed property costs.
Yep.
So yeah, it's really, it was just really clarification on phase two, and I think we've really had that answer to be.
I mean, Tom, if you could demonstrate that your lessons are available to all, and you do have students that are coming from the east of the borough, that would be a way that I'd try to enhance my application, if you like, based on that criteria.
All right, appreciate that. Thank you.
All right, good, thank you. Now there is understandably quite a lot of questions or clarification required about this loss of income.
Yep.
And one of the things is actually some people might be holding up, but they know the next 3 to 6 months or even 12 months is going to be absolutely dire. So, it is about timings for loss of income. So I think that's one of the questions that's coming there, and also the period of reductions. So again, you may have a good time and then be followed by 2 months bad time, and it may not show up. I think that's how I'm interpreting that.
Yeah.
So
So okay, so I had a discussion with a gentleman, and I said, well, can you show me what your income is for this? I think it was May or April, I can't even remember, compared to last April. And he said, well, actually last April we had a really bad month and it wouldn't show. So I said, okay, well, show me what sort of going back for a different period, show me what your normal income is. So he was able to evidence, I think their income was something like on average £80,000 per month, going back, the last 6 months of the calendar year for last year. So he didn't go back as far as April because he said they'd had a bad month in April, and if compared April for April, there wouldn't be much of a reduction. But I could clearly see that April and May this year, their income was lower than their normal average income. So that helped him. We don't have to compare month for month, if you like, for April 2020 to April 2019. But I take your point, Diana, about projected loss of income. And I had a discussion with a lady yesterday, and I encouraged her to send me through what she had, what they were forecasting, and whilst if you went by the actual policy, it probably doesn't meet it, but I don't see that that's a reason why we couldn't put that through to the panel to make a decision.
And the bottom line is about supporting businesses to
Absolutely.
survive through this, isn't it?
Absolutely.
So I think cash flow forecasting, looking to the future, if you know your business is going to take some time to recover, or you're still not able to trade properly at all, then that obviously is a projected cash flow that demonstrates that against your fixed outgoings. Really, I think is part of that. Isn't it?
I think in hindsight, we probably would have put a few changes into the policy. Having seen the applications coming through like that, it was very new to us, and trying to make sure that we covered everything. And I think it's apparent that there are perhaps things like that we've not covered effectively.
Well, it's the nuances of every business, isn't it? I think there, but. So another Peter Maynard is asking here that, okay, you may give you your sort of income projections now, and then in a month's time they may win some money. How does that affect? Presumably it's been awarded, and yeah.
If we're going to go down that route, Diana, then it's once we've awarded.
Right. Okay. So then we have another one here, which is. Hold on, I've just got to get that up. Okay. People that operate at a rented facility and at home. So this is where someone is probably got their office at home and then using rented facilities to provide the service, whatever that is. So how does that work?
I think that's fine. I mean, they should be able to demonstrate fixed property costs. Certainly for the business premise, I guess if they can evidence fixed property costs for the home address, which might be harder, then if they can demonstrate that, then we can include that. But I think that's hard. As I said earlier, I think that's harder when you're liable for the council tax in a property and you may be using one room as an office. I think that's harder to demonstrate that you've got costs related to that. You're certainly not charged business rates on that or anything like that.
But if you are renting, if you've got a fixed annual rental agreement with another organisation, then that certainly would apply,
absolutely.
wouldn't it?
Yeah, definitely. Yeah.
Okay, so then I've got another one here, right? So this person is in shared premises, but their rent is just above 51,000. So this is where their rent is topping over, but they believe that they really do qualify because they have a majority of their employees in the east of the borough, and they've been closed for 3 months.
Yep. So I'm not going to say to anybody, don't apply. I think we would have to stick to the policy. I think otherwise it's unfair on others. So if there was somebody else whose rent was 53,000 and they didn't apply because they looked at the policy and they didn't meet it, it would then seem unfair to me if you applied at 52 and we encouraged you, and that's fine by applying it, but it would just seem a little bit unfair if we awarded to you and we didn't give that opportunity to other businesses or organisations in the borough.
Yeah,
but
and I think...
sorry.
Go on. I was just saying, Helen from Love Wimbledon just asked about the same question, really, and would they automatically then go into phase 2?
Right.
I think that's what you're asking, Helen, isn't it?
So if anybody's applied under phase 1, she's not. Can I just answer that though, Diana,
and then
we'll
I'll
come
go
back
to Helen.
Yeah. So if anybody's applied under phase 1 and they don't meet the criteria because they're the ratepayer or something like that, when we email them and we say, look, we're really sorry, you don't meet the criteria, we're encouraging them to apply under phase 2. Now, phase 2 may have some different questions. So we don't want to take their application from phase 1. I know that means they've got to apply again, but it seems a fairer and better way to do it because that way they can address anything that we're specifically asking under phase 2. So
okay, lovely. So Helen from Love Wimbledon, do you want to come in then? And
Thank you. Yeah, no, sorry, it's all the detail, isn't it? The question is, in phase 2, does the 51k threshold of rent, RV or mortgage payments still apply under phase 2?
Yes. Yeah.
Okay. Thank you.
Okay.
Okay. Now, this is another question here about the equality gap from Russell Hogan. I don't know, Russell, do you want to ask that, expand on it, or I can ask it for you? Do you want to come in, Russell, and ask that question?
Yeah, I just wanted to, hi.
Hi.
I was just wanting you to expand on that comment, what exactly you mean by that, really.
And David, before you do that, where is that in the application? Is it like a free text field that you fill in and just put what you're okay?
Yeah, there'll be a free text field. So, as I said, I guess that somebody would ask. So we're looking at, or the priority will be given to businesses that do support that gap between the East and the West. And if I'm honest with you, sorry, I forgot your name, Russell.
Russell, yeah.
Yeah, I'm probably not going to be able to tell you a lot more than what I've already said. Looking at does your organisation or business assist the most vulnerable in the borough? There's a
what the gap? When you say the gap, what do you mean by the gap?
Okay, sorry. So I think there's a recognised position that the east of the borough is less affluent than the west of the borough. There's probably more vulnerable people in the east of the borough, and it's looking to. So that's sort of the gap. I think there's a recognised gap. I think I hear a lot said that the life expectancy at one end of it, I don't know what the bus route is, the 200 bus route, you get on at one end of it and you go to the other end of it and it's like a 10-year difference in life expectancy. So I think the council looks to try to improve that gap between both sides of the borough.
So what we're looking here is what you said at the beginning, really, isn't it? It's first of all, you know, if your premises is in that part of the borough, then you're in the east of the borough. So there we're really talking about Mitcham coming into Colliers Wood and Morden, but Wimbledon, Rains Park, Wimbledon Village are Wimbledon Park designated as the west of the borough, just so that we're all clear on that. And then if you are drawing people in from the east of the borough as your employees, and then whether your services are supporting those people. So that's why it's a free text field, presumably, because you've got to tell a bit of a story there. Yeah. Okay, does that help, Russell? Yeah. Good.
Thank you.
Okay.
Thanks, Russell.
Right. Any more questions then? Because I think I've covered them that are relevant to the discretionary fund. I have had questions sent in to us that are not about the discretionary fund, so we will take those outside of this and share them with the business rates team. But this session is purely about the discretionary fund, so we want to get people's questions answered as much as possible. So we do have another one here now from David Debussy. Do you want to ask that question, David? Come on, unmute yourself. You need to just unmute. That's it.
Here we go. Right. Yeah, the situation is what happens to sub-landlords whose rent is over 51k. So they are not the ratepayers. They've rented their offices to small businesses. Obviously, their rent is over 51k. Will they get help?
Sorry, so can you explain that scenario again? So you're a landlord, but you're not the ratepayer.
Sub landlord.
Okay.
Yeah? So we're not the ratepayer. We have got the building as we are the sub.
Yeah. Okay.
And
so
we have shared offices. Yeah.
Yeah. So you rent those shared offices out.
Yes.
Okay. So
the rent is over 51k.
Yeah.
Do we get help?
So the rent that you pay to the landlord is over £51,000.
Correct.
Yeah. Unfortunately, not. No.
The answer there, David, is that it's all your tenants that are eligible.
Yeah.
Yeah.
All right. Okay.
Mm-hmm.
Yeah,
I think that would be the answer, wouldn't it?
Yeah, that's a better answer than mine there. Thank you, Diana.
Well, it's that, and that would be probably quite a common situation.
Absolutely.
Where you've got a building owner, someone that is running a managed workspace similar or you know, tenancy type operation, that would be paying, if it's a large building, over the 51,000. But actually all your tenants, because they're paying rent to you, I think would be able to apply.
But what if they have left us due to the COVID-19? Because obviously there will be loss of income there, isn't it?
For you.
For you, yeah.
Yeah, for the sub landlord, yeah.
Yeah, I mean, yeah, there would be, but I mean that 51,000 that was part of the government's guidance and the government's criteria. So that's not something that the local authority that Merton have inserted into the policy. That was the government guidance on who is eligible or meeting those eligibility criteria. So as much as it sounds harsh, unfortunately, you wouldn't meet the criteria.
Okay.
Okay, and then
Diana, I picked one up about the confusion about the east-west.
Yes, yeah.
So that's phase 2. So that's phase 2. So it's a bit of confusion about the current open application. So for phase 1, that's not in the criteria at all.
Okay.
It's for phase 2 applications only.
Right. Okay. That I didn't grasp that. Okay. So everyone clear on
sorry.
that then?
Oh, really?
The east-west divide is phase 2 only.
Yeah.
So phase 1 is really looking at the fixed premises.
Absolutely. Yeah.
And the loss of income.
Sorry if I didn't make that clear.
No,
yeah.
that's fine. We're clear now. Right. We are 2 minutes away from the end. I think we've covered an awful lot of ground. Unless anyone has a burning question, I'm going to close this now. I'm going to say an enormous thank you to David for taking us through that. It is complex, and I hope it really has helped you understand how you can go about submitting your application. We've got some thumbs up, David. So,
yeah, I know, I saw that. Thank you.
Seen that. So
yeah, I was
really,
just
really helpful, because I know it is complicated.
Yep.
And, you know, when you drill down to businesses, I've learnt this over the years, every business is different. So we think it's maybe one size fits all. It is never one size fits all. And that is the challenge, isn't it, when you publish criteria. But we've got lots of thank yous. Anyone with any further questions, you have until the 24th of June at 5 o'clock, as David said, to submit this application. So you've got a few days yet. If you've got any questions, it is probably easier to ask them before you go through all the energy of submitting that application and to be disappointed. So I know that David and his colleague Sarah are really being helpful with people's questions. So very happy for you to submit those through to us, and or straight to rates
I was
department.
just trying to type. I was just trying to type my email address, but it's gone. So I'm
okay,
happy
well,
for you to give out my email address.
It's well, we'll do that in the follow-up.
Fine. Yeah,
David,
no problem.
We'll send that out.
Yeah.
And there is the resource from the council there to help you with that, with the specifically for the discretionary grant, but also for all the other sources of business help, and indeed all the mountains of new guidance that is coming out on a daily basis around specific sectors and easing out of lockdown. So we are hoping to do another Reach Out and Connect next week for what we call the phase 2 of coming out of lockdown, looking towards the 4th of July, if that is a reopening date. So last week we did one with the Regulatory Services Partnership at the council for the non-essential retail that has opened yesterday, and I'm pleased to see that it seems to have gone quite well and people are out there shopping, and Helen from Wimbledon is nodding her head there. So, you know, the overall message is to all of you as local people, please shop local and support local. We'll be in touch as quickly as we can about the detail of that next session. And as I say, from today, a big thank you to David and the team at Merton Council for being facing the music, if you like, because it's not easy. But, you know, please send in questions, clarifications, and 24th of June, 5 p.m. is the deadline for this phase 1, and more to come on phase 2 as soon as the council has a feel for the number of applicants and how much of that £1.3 million will be used. So thank you all very much for attending today. I hope it's been useful, and we'll be back in touch and we'll do a big wave. Thank you, everyone. Take care now.